Hey guys, today we're going to talk about options, specifically SPY ETF options. I thought it would be a good time. I've been doing some back testing and some research. I like to trade options on the longer term time frame. I don't like to overtrade too much. So I might trade them for 2 months or 100 days. But I'm going to just cover something for those that want to be more aggressive. If we look at the S&P, it's just been trending. I have a few moving averages here, and I'm just going to focus on this 30 period moving average, the blue one. And if I were to trade pure SPY options, this is how I would do it. Now, I don't trade pure SPY options. I trade on a fundamental basis, but I like to sprinkle in some SPY options, some S&P, especially as a hedge on the downside. So I'm going to buy quality stocks that I like. It could be Celsius, it could be IQ, it could be some of the Brazilian companies that I found that are on sale. And then times like this, when the market looks a little more toppy or expensive, I might go sell some call spreads, buy some put spreads. But let me show you some cool strategies for someone who wants to make short-term income trading SPY options. So I'm going to start with a list of options. These are they're only 7 days or 14 days. So very short-term options I have here for the calls, and I want to show how they've behaved, so you get a feel for how the market has been moving. So we know there was a big dip in August, and then there's a few other dips. Let me switch to, let's say, a 2-hour chart. And there's been a bunch of oscillating up and down, but generally trending up, right? So let's look. I chose 5 above and 5 below for the calls, and then for the puts, just at the money. And here's a good example of the choppiness. So this is the 605 call for December 20th. And if we notice, it's gone a little more sideways, but very tradable action. You could have bought it for $1 and change and sold it for $4. You could have bought it for $3. Sold it for $6. Could have bought it for $2, which is $200. Could have sold it for $7. Could have bought it again for $260 and change and sold it for $7. So it would be reasonable to say that it's been doubling from the lows, and that has been a very tradable range. Let's look, especially because the S&P has been moving, what is that, like 10% from the lows? Oh, only 3% and 5%. So to be able to make 100% on your money when the S&P is only moving like 3 or 5% is very enticing, right? Now the risk is you get completely wiped out of that trade. When you're buying at the money or out of the money options, you're borrowing money to invest. There's, at the end of the day, some broker is selling you the option because they're going to hedge it and they're going to collect income off of the trade. So the S&P right now is at 604, and the 605 option is trading for $3. So that means is there's no meat, there's no equity in that option. You're just trading the potential value because you're paying someone $3 to be able to buy it a little bit higher than where the market is right now. So it's all premium. It's all gonna vaporize. Unless the market takes off a lot, this option will not be worth a lot. It's just a tool for speculation while we wait for other deals to open up. This is more of an income trade. Now I can buy the calls on the lows. I can get out once it doubles. I could also sell a call or a call spread. When the market goes to 8 on this option, selling it is attractive. I could do a covered call. I could do a call spread. But you get the idea. Then let's look at the 2-week option. This is the 605, but with one more week of time. This is the December 27th. So the first one was the risky 7-day option, 8-day option roughly, and this is the 27, so 15 days. I don't like to trade 0 DTE options because it makes more sense for me to hold it for a little longer. There's just more risk in the 0 DT options for me. You're just going to be constantly rolling. I like to have a little more time. I mean, these have very little time in the big scheme of things, but they're cheaper. You're paying a high daily rate for these options versus longer term options, but that's how you make more risk. That's how you make more money with more risk. Now let's look at the puts, which I actually think are going to be in play soon. That one looks very good. So puts make money on the way down. They're used as insurance. The S&P could be rolling over. I think it is. That's just my opinion. So that's why I'm very interested, more so on the put side. If we look, it seems, this is the 2-hour chart. The SPY seems to touch the 200 period moving average in yellow. So every time it rolls over, it gets really close to that. So maybe it does it again, somewhere to 597, 596. If that happens, that's a $8 move. An $8 move on these options would be theoretically 6, maybe to 6, maybe to 7 on that put. So easily those options could double. That's the 2-week trade. The 1-week trade. Oh no, that was the. I think I'm missing one. No, I got him right. So the December 20th put is $200, $237, and it could double. It might even more because we haven't had a real sell-off in a while. So if I'm looking to just double my money on either the calls or the puts, I'm interested in the puts right now. I'm already in 100-day bear spreads, shorting the calls. And I'm also in 40-day bear spreads in SPY and Qs. So I'm already positioned. But I am looking to see if I could eventually, I'd like to script, excuse me, I'd like to script an algorithm to trade these. That would be the ideal, to have a setup where I can trade these automatically so that it goes in on a moving average cross and then gets out at about either 100% or maybe even 75%. But that's what I'm looking at with these SPY options. I'm looking to trade 10 days to expiration options on a regular basis. Let me know if you like that idea, that strategy, if you want to see that more, and maybe even how I script it. How I'm going to experiment with it, but that would be an algo or a bot. Let me know if that's interesting, and we will keep chatting.